I think we're seeing very heavy concentrations of adoptions in those regulated markets where cards, the authorization rates are a little lower, whereas we're acting as the processor. We're making the decisions based on data as opposed to having to rely on this exchange of limited data between the acquiring side and the issuing side. We're getting tons of data from this open banking, bank linking process in the checkout experience, and we can make very informed decisions that way. So if I'm being extra payments nerdy, it's really cool to see how it's developing in the US.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hello, welcome to Wrestling Payments. My name's Joe Casali. I'm your host. We have a battle today between good and evil. I'm not going to say who's who, but we're going to talk about sales and we're going to talk about compliance. For intros, why don't you guys introduce yourselves?
Well, I think good and ladies should go first. So, Sarah Stapp, Chief Commercial Officer at Aeropay. I've been in payments about 15 years, and this is my second time on Wrestling Payments. I'm very excited to be here. Folks that may have watched listened to the last podcast with Joe and I was employee number 20 at Braintree and have had lots of experience across multiple different geographies around the world and in the credit card, debit card, alternative payments, local payments world. And now I am hyper-focused on pay by bank in the U.S. with Aeropay. All right, Geoff.
Sir, so Geoff Scott, Head of Compliance at Aeropay. I've been in banking in some version of compliance for about 17 years now. So small community banks, regional, as an examiner with the Fed. This is my third or fourth fintech, and all along the way, just trying to fight the good fight and make sure sales doesn't get in trouble.
Nice. Just for those people tracking at home, he didn't say if he was good or evil. Just saying. As we go on, Geoff, I got to ask you, you're new. We have a little part of this that we talk a little bit about professional wrestling. Any experience? Did you watch it as a kid? Do you watch it now?
I threw my son on my bed the other day in a very fun, fatherly way. So
that
definitely a level of recent experience. I didn't really watch it much. I played a horrible Nintendo 64 game that didn't work very well when I grew up.
Nice.
But that's
That's awesome. They go across the screen like this. I know exactly what you're talking about.
Yeah.
Very good. All right. So let's get into it. Let's talk a little bit. When you're talking about compliance, let's start with compliance. When you talk about compliance, what are the top three things you keep in mind day-to-day basis on staying compliant? And I'm sorry, let's rewind just a second. What's Aeropay do, Geoff?
Aeropay helps people pay by bank. So to move money quickly and easily from a bank account to a merchant, selling them various services. We also help link accounts. So if you have an account at one institution and you need to link it to your merchant, we can help with that. We also have a fraud and risk product in the middle to try to cut back on any untoward activities.
And from a newcomer to the industry, not you, but the idea of pay by bank, how are you seeing growth? How's it developing? What's going on?
Yeah, I think it's fun being here right now because the interest is definitely picking up. I mean, coming off of COVID, people not wanting to pay fees. Me as a user, everywhere I go now, there's like, we're going to charge you 2 or 3% for a credit card. And I was an officer at Discover Network for a couple of years, so familiar with that side. I've just been really surprised that fee's out there. Also, before Aeropay, I'm familiar with Venmo, Zelle, all these other things. Like, why is pay by bank needed? But they grew up a little bit differently. So I think the growth where we have, like in regulated markets, and a lot of new types of merchants, anyone ranging from like grocery stores, software companies, all sorts of things that have been showing interest in our product has been really fun. Just for more of a compliance guy, like having a chance to be a front of the wave of a product, even though it's been around a while, different shades of form, like Pay by Bank itself just feels new still, so that's a lot of fun.
Let's. I'm just going to explore that just a little bit. Is it a U.S. system? Is international have it at all?
So yeah, there's Pay by Bank in the U.S. and internationally. Everyone has kind of their own version of it. Well, I don't know about everyone. There's definitely a Europe version. There's versions picked up in Latin America that I can't speak to as much. But the version we work on is definitely the U.S. version of Pay by Bank.
Perfect.
Yeah,
All right.
ours is on the ACH rails, right? And so we're living staunchly in the United States of America, but of course, there's SEPA, there's faster payments in Europe, there's in India, it's exploded in Brazil, it's exploded with Pix. So there's all these different flavors that are rolled out very different ways. So it's been actually really fascinating to watch. Like Geoff, like you said, it feels new, and it does feel new in the U.S. even because in the U.S. we're always a little slower, I think, to pick up speed and things like that. We have a lot more people in the game too. I think in the U.S. we have so many financial institutions compared to other countries, but we're getting there, and I think we're seeing very heavy concentrations of adoptions in those regulated markets where cards, the authorization rates are a little lower, whereas we're acting as the processor. We're making the decisions based on data as opposed to having to rely on this exchange of limited data between the acquiring side and the issuing side. We're getting tons of data from this open banking, bank linking process in the checkout experience, and we can make very informed decisions that way. So if I'm being extra payments nerdy, it's really cool to see how it's developing in the U.S.
So we're not really keeping score, but she got points for spam. Gotta check, not marking it down. So as you think about compliance, Geoff, what are the top three things you think about? I also kind of reach out to financial institutions. There's a whole, compliance is at the core for financial institutions. What are some of the things to keep in mind for compliance when we talk about pay by pay?
Yeah, a few things. I'll say a guiding principle for me for compliance is to try to find a way to get to yes. That's how I think about compliance in general. Not like give an answer. It's how do I make it yes? Which along the way I might run out of ideas. This isn't like let's commit fraud to get to yes. It's could we find a permissible way to get to yes? So that's how I think about it at the top. I think maybe number 2 right now is just a lot of focus on third-party relationships, especially partner bank, because the sponsor banking model. So we get kind of looped in with that, at least from like how I think about compliance at Aeropay. So you look at us and say, all right, you're a fintech, you're running a charter, you're partnering with the bank. We're not doing these things. A lot of the standards that are being applied to the third parties because of what happened with Synapse and the banks writing their platform, they look at us and say, well, surely you're holding customer money somewhere. We're not. And now the regulators are examining us really closely. So we have to look at you very, very, very closely. I'm not saying you can't look at us, you shouldn't look at us closely, but it's not in the same universe where if you have your life savings with us, it's going to be lost on the ground. Like that's not our industry platform vertical, whatever you want to say. Finally, I think just compliance in general, how am I organizing the program and how am I following what I said I would do without being a complete teetotaler with checkboxes? Because I got to merge how do I get to yes, but also what I have in place. So I think the interplay between those two things is really important. Get better over time, mostly follow what I have and try to find a way to things moving forward. I had this one manager Discover who said something to me which sounded so stupid, and looking back, but he's like, the company has to make money.
Oh, right.
So I think about that all the time.
That little thing.
But that's what I'm doing, Geoff, by bringing you all these deals, you see, is to make the company money. No, but Geoff is really actually really great to work with. I think that. Oh, go ahead, Joe.
No, that was a great segue. I wanted to see what your top three when you're thinking about it. Your pedigree is just outstanding. That last answer was like, yeah, check, check, check. You only got 1 point, but it was great. But when you're thinking about sales, is it education or is it sales? How does that all work? Your top three things you think about.
Yeah. And I think for me, it's especially working with somebody like Geoff who has that mindset, because I've worked with plenty of people in risk and compliance in the past. I won't name names or companies, but they've been dubbed the Department of No. So, I have had a lot of experience trying to stand on my head and say my ABCs backwards and, what is it? Pat your head and rub your belly at the same time, whatever that takes to get compliance, to say it the right way to get the right answer. And so for me, from working with compliance and how do I get deals through, it's making it as easy as possible for them to say yes. And to do that is understanding the framework in which, and my sandbox basically, in which I'm able to play in. Now where it gets fuzzy is when, it's like, oh, we don't do adult. Okay, well, is a dating service adult? Like, it's just understanding those definitions, right? But asking early on and qualifying. That's where I've gotten burned in the past in doing sales stuff, because somebody wants to get a deal and I see big dollars and I'm like, wow, that's a great opportunity. And I brought it to compliance. They're like, why did you think that we were going to accept this? And I was like, because they're like the biggest X whatever in the industry. They're like, okay, but it's still blah, right? They're like, we don't do that. That's on our prohibited list. So, understanding the prohibited list, but also understanding where there's the gray and getting that sense of clarity for compliance is very important. I think to your point on education, education within our own sales team, but then also educating compliance with putting this information together. What is the use case? What is the flow of funds? And I feel like a lot of new salespeople, especially in payments, they just think, oh, it's payments. It's like, no. I need to know, like, are they holding funds? Is this like a PayFac model? Are they operating as merchant of record? Are they taking on the risk? Are they handling customer support? What's their refund? Just like understanding, even though Geoff is trying to make it as easy as possible to say yes, there are still boxes that need to be checked, right? Like, you have to have a refund policy. You have to have these things in place. So I try and do my due diligence in the very, very early stages, even before I'm spending a lot of time with that merchant, because I don't want to waste their time. I don't want to waste the company's time either, going down a path that we wouldn't be able to approve them. Or if I identify an issue, then I am, highlighting that early on, like, hey, we are going to need. So like a good example of that, I think, Geoff, is like the third-party audits, right? For a lot of regulated industries, we have to get third-party audits or legal opinions. That is not something that you're going to be able to turn around in a week, right? If you don't already have one on file, highlighting those early on and say, hey, we can say yes, but you do need to provide these pieces of information. So I think it's doing my due diligence. It's educating the merchant on what is needed and educating compliance, and really putting together a package that is explaining their use case, their flow of funds, what is their business, what are they selling, what are they actually doing at the core, even as long as it's within the acceptable use policy of the company. And if it's in the gray area, then I'm going and talking to Geoff and being like, hey, Geoff, so I got a really cool one. Anytime I say it's really interesting or really cool, it's definitely pushing the boundary. Jeff's like, uh-oh, now what? What does Sarah have today?
I get excited.
He does, actually. He's like, ooh.
I kind of want to set you guys against each other as far as like a debate goes. But I have a question. I have a couple. I have lots of questions. I have to capture them because I forget them. As you think of what you just said, you said prohibited list. Are you seeing this year, especially with the new administration, that morphing at all? Because I know I watched and I continue to see news, but I watched a debate by senators grilling regulators on, why aren't you letting digital asset companies bank? You're prohibiting them from participating in the banking system. And they went off. So Are you seeing that line move at all? Is that changing?
Yeah, and I think we could both answer, but I wanted to point out my background is gray and Sarah has guitars. Like this, I'm just not altering the perspective of compliance. But yeah, so to answer your question, I'd say definitely with crypto, with digital assets, the perception is a little bit better. Now, I was at a crypto company and I had some crypto myself. So like myself and my views have been a little more open to it, but like, yeah, banks that wouldn't talk about it are now talking about it. All these companies that are talking about a dollar back coin who never would have probably entertained it before. Some people would have, but a lot would never have. It's definitely there. There's some things where like I'd like to see more movement. Cannabis, like there's still a lack of clarity federally. Meanwhile, you have like new markets like that pushing some attention locally. So that still hasn't been solved. Now there's other similar products, if you will, that are looking to get the same attention. Yeah, I know I'm missing one other out there too. But well, yeah, there is an interesting area, especially that affects us, the whole state versus federal gaming. That has been a really interesting one to watch because generally at the end of the Trump administration, there's like more states' rights. But sometimes the federal regulator that might make business easier. So it's not really that clear. And the line may be moving there about like what's going to happen with states versus federal. I don't know. Things are changing. Your answer to the question.
Yeah, I was actually going to say something along the same lines that like this administration has been so heavy on states' rights on so many topics. But in our world, in payments land, I think particularly with crypto, I think it's a combination of obviously there's interest of a lot of people that have a lot of money in crypto or want it to do things, but also, and we've seen it in other countries as well where the central banks are supporting it. So I think it makes sense, regardless of who the administration, it is whoever is in power, like we as a country kind of need to get on board, right? That's the way that things are moving. Almost everybody I know has crypto. Even my granny was asking me how she gets Bitcoin. And I was like, why do you want Bitcoin? Because I was afraid that there was like some scam that she was trying to do. I was like, Granny, is somebody asking you to send you Bitcoin? Because you should not send anybody Bitcoin. She's like, no, I'm doing it as an investment. She's like, she's buying crypto for my kids. It's super cute. But then like she didn't know how to do it, right? Of course, like it's very complicated for people who don't understand. It's even for people like us. I think in payments who understand all these bits and pieces and bobs are like, it's scary sending money. Like, is it going to go there? Is it going to get where it is? So I'm actually very interested in what's going to happen in the next few years. But I know 5 years ago, we like crypto was a no word. Like that was, you did not talk about crypto, especially to the banks. Oh my God. Like, and then they would go wishy-washy. They're like, okay, we'll accept some crypto. And then no, never mind. We're not doing crypto. Okay. We're kind of doing crypto again. We're dipping our toes. But now I think with this administration, everybody feels like they can go whole hog. And like, to your point with these senators that were grilling people, they would not have been grilling people 3 years ago. They would have been, why are we talking about this? Like, this is fake, real. This isn't all of that. But I think the infrastructure is being built out. I think the, people are getting more used to it and having it back with a stable coin. Like a lot of pieces are falling into place. So I'm really excited about it, especially for us. For Pay by Bank, it's a great use case.
Excellent. My next debate question. So we have a fintech initiative going on. We're working with fintechs and really trying to get them to partner with banks and all of that. 5 years ago, right? If I use your number, 5 years ago, regulation was, in my opinion, fintechs and banks were speaking different languages as far as here's how our product works, and the bank saying, here's how it's regulated. Would you agree, and you both have experience with this, has that changed? It seems like fintechs are much more knowledgeable about regulatory requirements now. Thoughts?
I just rely on Joe or Geoff to tell me what the regulations are. Geoff, do I need to care about this? But no, I at least in our company, Geoff is always paying attention to the regulations. But I think definitely the lines are much more blurring. Like you said, it with kind of like fintechs and banks were like at a dance and they were like on opposite, like opposite ends of the room. They were not, no commingling did there happen. But now I feel like the financial institutions are actually like reaching out to fintechs and saying, hey, let's work together. You guys do your thing really well. We do our thing really well. And I feel like it's because fintechs have tried to get into the regulatory game and different companies have had different levels of success or not, as we've seen in some implosions, some pretty big stories in the past. But I do still think that fintechs are never going to be as good as at regulatory things as banks are. But banks are also a lot slower, and we can, as Aeropay as a fintech, we can provide that layer and that speed that they just can't get to. So I'm actually really excited about us like actually working together as opposed to being like, what is it, the Jets and the Sharks on, was that West Side Story, right? Like with different
West Side
gangs.
Story, yeah.
What
We're
do you
break
think?
into song now. Yes.
I don't know, Jeff, can you sing? What do you
Only
think, Jeff?
Coming from that background, thoughts on, have you seen an evolution or were you always, we were always compliant?
I think the pressure has definitely been on more. Like that first kind of tranche of fintechs, and I was, with my observation, I was actually, so I was at G Capital Bank. We got sold to Marcus, but we were a little different because we had a industrial loan charter. So that was a bit of a different situation, but like the earlier days, I think some of them, the volume was there. They went and talked to a bank and the money was happening. So it was coming so quickly and the revenue was going up. Some people were caught off guard. And then as far as the regulatory side, like when I look at like third-party risk guidance, it wasn't really designed for like, there's this whole new thing that's like an appendage to the bank that brings in customers, and it just didn't really like, oh wow, banks can have like a child like that's not a subsidiary, but it's like it's here. So I don't think the setup was really there, even though like if you were looking ahead, you could see where this should go. Like, well, they're giving us depository FDIC insurance. They're giving us a little bit of a not a shield, but like awareness with their name being here, so the customers can feel safer. So we should give the consumers, customers, whatever, the same safeguards. I think the smart fintech probably saw that coming down the line, and I don't know, five or so years ago, as I feel like was more the heyday of this, when there was kind of a peak there, and then at some point there's almost like, how much opportunity is there here in some of these spaces, especially neobank, when at the end of the day it's checking and savings, and like how much different is it really aside from the skin? And then you have this whole risk thing where there's people over here having a lot more freedom because there aren't quarterly continuous supervision, audits of every kind. And then you have the bank who's like a little bit shielding from all that. So that, I think, caught up. Long way of saying, like, yes, I think there's more compliance knowledge in fintechs now. Definitely depends on the type of fintech.
Mm-hmm. Excellent. This is great because as you guys speak, I just keep thinking of new topics. So this is great. You mentioned earlier Synapse, and Synapse is one story. There's been other blips along the way. Can you, Geoff, just give the short version of what happened with Synapse, and what's changed since?
Yeah, short version. So they were kind of the core provider sitting between techs and the bank. So in theory, bank and fintech are relying on them, or no one really knows who is keeping track of where the money is, how much money has moved in or out. And along the way, some or all of these parties lost track of how much money should have been in which accounts. So that's the short version. And there was one or two failures, and then there was contagion because people started to get their money out when they heard of concerns. And now you're dipping into the FDIC fund that I think people were hoping wouldn't happen because, well, you have these insured accounts and there's a ledgering system and we know how much money went, but really, I know that's anyone involved in this, but once I think you're actually like taking from the depository insurance fund, now everyone's eyes are open. Customers are losing life savings So yeah, not even just forget the government fund, like you've lost your future because you thought you had insurance, but really you didn't. So now the scrutiny is much higher. I mean, that's the biggest reaction, I think, is at least in places where you're telling people you be able to trust that your money's safe. Like, we're going to really, really look at.
Sarah, anything?
No, yeah, I couldn't have said it better myself. For the first time.
Point
For
for
the first time. Yeah,
point
Geoff
for
gets a point.
Geoff. Point for Geoff. Punch for
How do I get these points? I don't know if I trust this system.
Yeah,
It's like, whose
well,
line is it
that's a-
anyways?
that's a-
The points don't matter.
The points don't matter. Yes, exactly right.
Agree, yeah,
Trends. Sarah's going to win. I'm sorry, but trends. The trends. What are you seeing for trends? Are there, how do you stay up to date on compliance? How do you stay up to date on, I think back, 20 years ago, there weren't as many payment options. There
No.
just wasn't. And today there are so many payment options. Some of the payment options, I'm a big faster payments guy, and I understand the value of a faster payments is the settlement is immediate and it's good. It limits counterparty risk. Awesome. As a consumer, Venmo's super fast. Cash App's super fast. So how do you stay ahead of, from a regulatory perspective and compliance, and but there's all these other options. Whoever wants to go first.
I have a little bit to say, and then I want to hear what Geoff has to say. But I think just from my perspective of just pure payments nerdiness, I think it's very fascinating. And it kind of comes back to a lot of things we were talking about, like fintechs and banks and things that are changing and speed and all that. You're able to stand things up so much more quickly as a new company, right? You've got these like banking as a service, like BaaS, offerings that are available. So a startup can actually grow and do things pretty quickly. Innovation is happening. I mean, AI is a whole nother topic that we don't have time for today, but it's been accelerating so many things in our industry and everywhere across the world. It was already hard to keep up with that. There's so many things, like things are moving faster and faster and faster. And to be fair to the banks, it's hard to keep up with all that. To the regulators and the compliance teams, it's becoming harder and harder and harder to do that. Fintechs don't have as much of that scrutiny that Geoff was talking about. So we're moving faster and faster and faster and faster as a group. And the banks are trying to keep up, right, with all of that. So it's very challenging. My short story long answer is it's very challenging, and there's so much information out there. The only way to really know what's going on is to read the really, really dry, boring abstracts to really know what's going on and understanding what is actually written in these changes, like in the code, in these things, as opposed to somebody on LinkedIn or somebody, is hot take on something. It's not my job, thankfully. That's Geoff's job to read all that stuff and then tell me what's important. But so he's much better equipped to answer the details of this. But what I'm seeing at a high level is just everything is moving so much more quickly that it's just becoming really challenging to keep up with everything, especially in the U.S., especially when it's state by state, when you're talking about things that are not federally regulated, like gaming, like cannabis, or things that have geofencing elements, like prescriptions and things like that. But Geoff, what's your thoughts on that?
Yeah, a lot. I mean, so you give me credit for looking at trends. Now, maybe some compliance rule changes for sure, but I've literally asked Sarah, what are you seeing? So sometimes that's all I do. It's just
I'm boots on the ground,
Yeah, just ask her, hey, what's up? I mean, I follow things that are probably a little bit after some of the commercial trends. I mean, I'm on FDIC alerts and Fed alerts, OCC, and then I also have custom Google alerts, looking for gambling law changes, privacy law changes. So I have a lot of feeds coming in, and then sometimes I'm on LinkedIn, and we have an internal industry news Slack channel where people post articles. So I'm just trying to spend a half hour or an hour every day just reading a little bit of this. I mean, that's trends for me. Yeah, Sarah mentioned new things coming on. To give you a flavor of me, maybe the average compliance person, when ChatGPT came out, all my friends were trying to see the most ridiculous story they could write. Well, I was still reading their privacy policy.
Yeah.
And I actually read it before I signed up, but it was like there was no protection over my email or phone number or name. Like, and I was like, I'm not signing up with this. Like, no, thank you.
Well,
So interesting. So right.
if this whole payments thing doesn't work out, we can come up with we can use AI to bring together payments compliance news feeds for the industry. That's
That'd
what
be
we
great.
can do.
Easy peasy. Do that in an
I told you that.
afternoon.
Yeah.
This may be an unfair question, so feel free not to answer it. Stablecoin's coming along, right? And it's right now it's a passed law and it's been signed, and the plan is to have the states regulate it and audit it. And one of the things I've always thought is the FFIC guidance. It's behind. It's I don't want to sound like that. It's behind. And if you look at
That's
the
a good
emergent
radio
payments,
voice.
yeah, if you look at the emergent payments in the FFIC retail payments guidance, it's webs and tells. And I'm like, that's not emerging.
No.
Any thoughts on how even the regulators keep up with how fast things are changing? And I don't know if that's not a fair
true.
question. Don't answer.
No, that's so true. I think the last, I haven't looked at all of it, but a high risk business was considered internet banking. Like, I gotta go check if that's still in there, but I was like, that's everything. It's like, what?
Yeah.
So, yeah, good question. How do the regulators keep up? I can tell you that at like the Fed, we had like a conference thing. So like at Chicago, examiners would come from across the country, and you'd hopefully have someone who knows what they're talking about speak on a certain topic. So there's a little bit of like this internal professional training that people can do. I think the reality is most of that, where most of the learning happens is them getting on science. A lot of folks would go with the examination path, like might start in accounting or finance, and they haven't like played operationally with some of these things. As far as the learning, I think it'll be behind. I think you're right. And then depending on how funding plays out, like I generally don't view the state regulators as having the same funding as federal. So they're going to be a little bit handicapped there. I mean, some states are going to be better than others.
Yep.
But how they can get ahead, there's the same stuff the rest of us are supposed to do is get certified, go talk to people. It's just a little harder when you're in that situation because you can't say I approve this, or I'm going to give you my view as the state or federal regulator that like this is okay. So I don't know if it's your question as much. Yeah, I think this is hard to figure out.
Yeah, I think you're like, there has to be, I mean, it's similar situation. Now it's a little dated, but 7 years ago when I was still at Braintree, PayPal, one of the projects was to open up some of these high risk industries. And one of those industries was games of skill, games of chance, right? Which included like the fantasy sports betting and all of those types of things, sweepstakes and all that. And the answer from our banks was no. For 2 years, I was told no. And then we just kept coming back with like, let me educate you. Let me explain to you what's actually happening. And this is why we are okay with this. This is why our compliance teams are okay with it. But they kept listening, even though they were saying no. We got told no several times. And we got okay, maybe let's try it with one, right? And then we got like conditional approval. And some merchant and some PSP processor has to blaze the trail for everyone else to, clear the path for everybody. Somebody has to do the hard work and, take the path untrodden and clear the way for everybody else. And to Geoff's point, they have to understand everything. They really have to get in there and like get in the thick of things and understand how everything works. And then when they do, it's like, oh, okay, it's not as scary as I thought it was. But I think, if you're not specifically on like crypto, for example, most people I talk to that aren't in the industry, I talk about crypto. They're like, oh, like Bitcoin. I'm like, okay, well, that's one token or one cryptocurrency. It's not backed by, it's not pegged to a fiat currency. It's like, how many cryptocurrencies do you think there are? Like, I don't know. PayPal has like 4. And I was like, just go look, just go see how many there are. Like, you can make new ones all the time, right? So I think really getting good about using the right terminology with compliance. No offense, Geoff. Is you really have to pick your words correctly. Like, you don't say crypto, you say stablecoin. Something like that, just to give that. It's infinite risk concentrated, like putting the risk into a box that can be quantified. I think if I can give that to a compliant person or a regulator, it's much easier for them to say yes as opposed to no. So that's, unfortunately, for whoever that first merchant is that's blazing the trail, that's really, I think, how that's the way it's going to be. I am a little nervous about the states, though, versus federal. I just feel like it would be a lot smoother rollout if it were federal, but nobody asked me, so,
What? You're not running for Senate?
No, not yet. That's next year. Yeah.
Next year.
Yeah.
So I guess my final question really isn't a question. It's kind of an idea. And then, we can go into the final argument of why compliance is more important to sales or sales is more important to compliance. The final topic is kind of what you just mentioned, innovation. As you think about innovation, that gaming area, they're so good at what they do. I mean, from what I understand, you can cash out, you can cash in, it all works seamlessly. All the people who use it are happy. Well, not happy. Happy that they can deposit or withdraw money, maybe not otherwise happy.
Only
but and it's like a use case like that really pushes the systems to innovate. I think pay by bank, I think that's an innovation. Any thoughts on innovation and how it plays into your area?
Yeah, I think from my perspective, I mean, I got there first, Geoff. Shush. What I would say is, I think the gaming being a great example, whether you're talking about gaming or any other area of innovation, in payments innovation anyways, it all starts with us as the consumer, right? No matter, we're a pay-by-bank provider, our customers are merchants, right? You would think. But actually, our customers are also consumers because they're part of our ecosystem and they're the ones that are driving it, right? If we're talking about, all the things that we're talking about, like interchange and things like that, that's all driven by acceptable consumer behavior, right? You can charge that much for interchange in the US because everybody wants their points, and merchants are like, well, I have to accept it because I need, if I want people to pay me, then I need to pay for these things. So I think, in my view, innovation in payments is always so consumer driven. And that's what I always go back to is like, what are consumers? So consumers are the ones that push for innovation in gaming because they were speedy. They needed that money in so they could make those really quick bets, right? And then when you win, guess what? We're a very impatient society. I want my money now, right now, Saturday at 2 a.m. Dang it. And the system has responded to that over the last, 15, 20 years with RTP and FedNow and things like that to respond to the demand. So it's very much consumer driven, and merchants obviously want to they want to accept as many payments as possible. They want to keep as many people on the platform. And with all of this competition, gaming and not gaming, right? Like, you have to continue to be competitive and keep those table stakes offerings. So it's just constantly like, go, 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 go. Everybody's wanting to.
Did you just say table stakes?
I did. It was funny.
Extra points for that one.
Don't give her credit. That was an accident.
I did it on purpose. I was going to say if you caught it. But yeah, that's kind of my thought. Geoff, anything you'd add to that?
Yeah, I'll try to play the hand I was dealt.
Don't just point for that one.
Hopefully push all my chips to the center of the table.
Guys.
No, I mean, innovation's important. Sometimes I was just thinking about it as Sarah's talking. I mean, sometimes I'm like, I don't want it. I don't want change. I just want to be like an old guy in the corner, and I want to keep doing things the same way. Then I get bored, and when I'm bored, trouble happens. I just start to like press at the system and just try to change things that shouldn't be changed. But meanwhile, I need to accept the innovation and change what I'm doing. It's interesting there because like I feel like compliance, we have to innovate every day. Really over this past like 10 years, especially when I first started, maybe this was just me. I was like, I'm going to be in my ivory tower. Here's a roughly improved, understandable version of what the law says. And then a few years after that, it's like, I'm in the trenches with you. interpreting it and telling you roughly what I think you should do, and then you're telling me I'm completely wrong, and hopefully somewhere in the middle we get to a solution that solves the rule, the prohibition, whatever it is. And now it's like I have all these rules, and I need to figure out how to make easily digestible version of them so sales can get something through, just like what sales was starting with Sarah.
I'm sales,
You're more
Sarah.
than
I
just
respond to both.
Sarah. Yeah,
Thanks,
she's
Jeff.
actually a sales bar, more than what she was talking about earlier. Like,
This is AI.
how do I? Yes, like with all these rules and everything and moving fast, what's the best way for us to process something? I mean, meanwhile, we're getting the lowest resources. So like innovation and compliance is a lot more important than you would think it is, just on the surface. I'd also say like, I wish there was some constraint to it sometimes, like, or someone was holding like the chat GPT coming out and like, you know, this privacy policy, you can do whatever. No one was there to like, just, hey, consumers, like, yeah, it sounds fun to like make a modern fairy tale story with like modern actors. I don't know. Did you read this thing? There's just no one there. And I guarantee you that I'll get in trouble. And then generally, like, I think AI is just the buzzword, but there's no agreed upon constraints, like zero. We're just going to let it do whatever. So it's my worst fears of Terminator, et cetera, like going on. But I mean, like, stablecoin, like the fact that there's a law coming out is better than what was happening before, which was kind of like, we're going to shove it into the MTL area, or otherwise just kind of like bury our heads in the sand. One thing that's interesting that former manager Mike Kirkmeyer, just give him a little credit, the U.S. is really powerful in OFAC and sanctions because transactions have to clear in dollars. Huge volumes of the world's money movement clear in U.S. dollars. So if China has their own, you know, China coin, and Russia has their own coin, and all these guys have their own, we lose a giant weapon in U.S. public policy. So,
Well, that's a couple of points. That was a nice
That was a good
nice
one.
statement.
Yeah.
That was good.
You think we'll have that same, like with USDC stablecoins, that'll all have to be under that same umbrella, but still, if they've got their own, they don't need to move it through USD. So it's
Right,
it'll be an
exactly,
interesting. Yeah, that's I hadn't even thought about that. Thanks for giving me nightmares, Jeff.
You're welcome. Yeah, we just don't want to be too far behind it, you know, because we're
Yeah.
afraid of what it's going to go. Meanwhile, like you miss, like U.S. public, you know, international policy. Like, oops.
Yep.
Exactly right. Any closing statements? I will tabulate the score. Yeah.
Great, like computing. I would say, you know, obviously I think sales is the best, but if I don't sell anything, then compliance doesn't have anything to compliance on. But so there's no applications if I don't sell anything. But being top of the front of things has its own challenges, but I do have like a lot of freedoms that compliance doesn't have. Like, I don't have to think about these, doomsday scenarios like Jeff has to. I just like, how can I make it fit into this box, as opposed to Jeff trying to make the box fit whatever I've given to him. So there's a lot of freedom in being able to bring interesting things from a sales perspective, but it is also a challenge trying to not waste time and resources as these things are changing so rapidly, like especially when there's state by state changes that are, up and down all the time, and wishy-washiness in terms of what's the hot flavor of the week and things like that. So I definitely would not want Jeff's job. I definitely would prefer this job, because I would have dark circles under my eyes if I had Jeff's job.
Yeah, Julia,
You want to do sales,
so
Jeff?
I don't want to be told. No. I mean, like, you have to be told no a lot, and I want to be the one saying no. So I just want a little more of the power, at least in theory, and that's why I'm over here. I'm just afraid of rejection. So, but no, I mean, I think from either side, it's a mindset. I know, going back 7 or 8 years, like, sales is crazy. Like, why do they want to talk to this, like, whatever it is?
Oh, we are
And now
crazy. That's still true.
but now it's like, well, what? Like, they're trying to make money for the business. They're trying to hit maybe their quota. Like, so that's kind of their side. But now, if we get in trouble, what happens? And what happens to the company? So, like, where do I meet them we're there and try to do what's needed for all of us. I don't know, so much of it's a mindset.
That's excellent. You really represented compliance really well.
Thank
Really
you.
well.
Yeah.
So, okay. So if I tabulate the score, Sarah was leading for a very long time, but Geoff came in at the end with the U.S. currency statement. So it's
That
a
was
draw.
Oh, that's okay,
Right.
Geoff. I'll accept the
Yeah.
draw. That was very good points. And now I'm going to be doing some ChatGPT research on that nightmare fuel that Geoff gave me.
That's good. Well,
It's
we're
a
going to
real
honor
thing.
the score. That was, I don't know. I needed to test.
Yes.
The real thing. All right. Well, thank you for joining me. If you guys want to reach out, their information will be in the show notes. Thanks. What are we going to do next time is the question to ponder.
Oh, we'll think about it. We'll come up with something good, Joe. Don't worry.
Love it. Yeah. We'll turn this
All
into a monthly show.
Love
Excellent.
it.
All right. Thanks.
On behalf of Nietzsche, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of Nietzsche.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.